Good afternoon, everyone. Happy Friday. Gabe Velazquez here with you, transparenttrading-solutions.com. Welcome, everybody. Hopefully, you guys have a terrific week, or at least the last few days since I saw you on Tuesday. So, as usual, let me just start with all the formalities. Again, give me a thumbs up. Give me check the links below. If you know anybody that's interested in what we're doing, also let them know so we can grow the channel and so forth. Okay, all right. So let's get right into it. So last time we were together, Tuesday, we had that price shock with that surprising CPI number, as everybody knows. We had that big kind of sell off. And then since then, really, we still are obviously going lower, but at a much let's call it a much slower pace, right? So we kind of pause. We kind of been stair stepping down in a kind of a very kind of, we kind of build these little shelves of trading, and then we fall down, like we kind of pausing around that 3,900, and then we came down. Even today, in fact, I think today the market was fairly resilient. The S&P, we in fact are getting, we're still going to be down on the day, but all in all, if you look at your charts, you can see that we are essentially just kind of trading sideways. We basically just chopped around since the Globex session. We are coming into some really nice levels, 38.40 on the S&P, and then below that, there's another level right below that. So, and the other thing I wanted to discuss with everybody today is under the surface, there's kind of a rolling correction going on. So if you look at some of the individual stocks, what really kind of caught my attention yesterday was, I don't know if you guys are familiar with the ARK fund, the ARKK, which is basically all of the kind of high flyers from last year. It's got Tesla is one of the bigger holdings, but it's got I think it's Peloton in there or whatever. I mean, it's that Kathy Wood fund, that the innovative fund or whatever. A lot of those stocks, that fund itself is down like 70%, and a lot of the stocks in that fund are non-profitable, so they're down anywhere between 60 and 80%. However, I don't know if you guys noticed, that thing was up yesterday, which is really curious, right? Hey, Robert, how you doing? And and even today, if you look at some of the stocks, like I think I mentioned on Tuesday, I was kind of looking at Tesla. Tesla's holding up really, really well. In fact, at TTS, we're going to put on a position in Tesla probably next week in front of the Fed. So we have, obviously the Fed meeting tomorrow. Everybody kind of knows that. That's going to be the big, kind of the big deal. Now, similar to what happened this week, are there going to be any surprises? Because remember, the market sold off because it got caught off guard. Basically, market doesn't like surprises. As of right now, I think 75 basis points is a lock, but you never know. So if the Fed comes out with 100 basis points, or they have any kind of hint that they're going to kind of pause for the next, which I don't think they are, that could also set up some huge volatility on Wednesday when the Fed comes out. So we'll see. We're going to be together before then, anyways. On Tuesday, I think the Fed announcement is on Wednesday. Yep. The VIX isn't moving a whole lot, but that doesn't necessarily mean. I can get into that discussion with you a little bit later, but I'm seeing some stuff under the surface, just like we were the other. Remember when we were at the lows, the VIX was kind of just spent a really brief time up around 35, and then the market kind of just was setting up for a nice rally. So it's going to be really interesting. So to sum it up, let's actually on the indexes. Obviously, we the way I've been talking to my members, and by the way, again, I'm offering 5 free days. I'll talk about our positions in a little bit here. Let's just finish up this conversation about the indexes. I still think that at the end of the day, the indexes are going to be basically in this massive range. I mean, if you guys pull up your charts and go all the way, I'm talking about pull up like a weekly chart of the S&P, right? I'm talking big picture. And basically, we had that big sell-off in the early part of the year, and I would say between the low in mid-June, right? And then we had that massive rally into the middle of August. I do believe we're still going to, be in these big ranges. And for the, I know everybody again, right? Everybody's starting to get bearish again. So it's really interesting, right? When we were at the bottom, everybody was bearish. And then we had this big rally and everybody started turning bullish. And now everybody's starting to turn bearish again. So that's the whole dynamic, what causes these ranges, right? Where you've got this, this kind of battleground. Everybody, takes a side and that type of thing. So we'll see. I think next week's going to be pivotal. And one of the things also, if you guys have been watching, I'm doing this now 2 months now. When we were coming into September, by the way, and also if you were reading my newsletter, mid-August, I was mentioning the seasonality, the bad seasonality in September and so forth. Now obviously we crossed the middle part of September, and going into October, we have a saying, October is the bear killer. So keep that in mind. So we could have some further weakness, but we used to call October the bear killer because just like you see in September, usually you get sell-offs and really bad kind of bearish action. Usually it bottoms out in October, right? So October is when you usually get the lows, and then the market kind of goes from there. So it's going to be interesting to see if we kind of come in, make a new low, or retest the lows, and then rally into the year end. That is the normal pattern. Then we have obviously midterm elections and all that. So I would still just kind of be patient. I am looking at TTS. We're looking at buying some stock in the next couple of weeks. Tesla, some semiconductor stocks. One of the things that took the market down today was FedEx, right? Hey, Karen, how you doing? Yeah, but again, Karen, you gotta. Are you a futures trader, or are you? Because I'm not just a futures trader. My members. Some of my members are actually. I mean, we just did an options class yesterday, in fact, right? And also, some of my members are actually long-term investors. So we do everything. We're not just kind of pigeonholed into. I know you guys are kind of, pigeonholed into this short-term trading stuff, and that's all. But I have to tell you, I mean, in all candor, short-term trading usually doesn't pan out very well for everybody long-term, right? Right, Karen? So that's all fun and well, but yeah, you got to diversify, everybody, right? You can't just kind of, statistically speaking, that kind of day trading kind of stuff doesn't work out over the long term. So in any event, but good, Karen. I'm glad you do a little bit of both. So my point to you is that I think there's going to be a great opportunity coming up for you long-term investors, and you guys, if you have known me for a little bit here, I'm a big proponent in your 401ks and your IRAs and all that. For me, stocks are for trading, and the index, particularly the SPY, is the only thing you need to do for your long-term holdings, right? So if you have a 5 to 10 year time horizon and you want to put some money away in a retirement account or whatever, just look at SPY, cut and dry. That's pretty much it, right? You'll do very well with that. The fact of the matter is, 90% of active managers, i.e., mutual funds, money managers, whatever, can't even beat the S&P. So my premise there is, why the heck are you going to mess around with all that when you can just buy the S&P 500? Does that make sense? So that's kind of, you kind of threw me for a little rant there, Karen. Yep. But so yes. Back to your question. Yeah, there are actually a couple of levels below on the S&P on a shorter term time frame. It's actually AARK. Is it? I personally know, and that's a great question, Robert. I would deem that my 10% speculative money. How's that? So you can take 80 in SPY, and again, I'm not going to give you any. I can't give you any specific advice. I have no idea what your age is. I have no idea any of that stuff. So I would just categorize that, Robert. I would categorize that as speculative money. How's that? Okay. So if you want to take a flyer, that's pretty much it. It's a great. I think I mentioned to you guys SARK, right? That SARK. That's the short for that's a good proxy for going short, by the way. And by the way, look at what that did in the last few days. So it's very interesting what's going on under the surface in the stock market. So let's finish up with the indexes. I also have a nice level in Russell that we have at TTS. We are looking at right around the 1750 on the Russell 2K. And by the way, that's acted much better. In fact, it had a really nice bounce today as well. Actually, better. It was actually much better performing than. It was the better performer, I believe, in the last couple of days, right? So those are the areas I'm looking at. Now, TTS, we're long wheat still. We're long in the oil, USO. I did close out. We did have a couple of options. We were in the UNG. That kind of netted out a little bit of a tiny profit because we did a strangle on that one. And then we did have the TLT option expire. But we had a really nice trade in silver today. We just happened to really work out. We just kind of got lucky. We got in at 1885. If you look at your charts on silver, you want to know. And again, not all the trades work out. So we did have, we hit that TLT small loss. So we can't, I'm not one of these guys that just gives you, nobody ever wins all the time, and it just shows you all the winners and never shows you any losers. So, as you know, I rail against that. So, but 1885 to 19, we got out right near the close here on that. So that was a really nice trade for us today. Some of our members really took advantage of that, and so we just, that was a nice pullback. And if you have been listening to my channel here, you recall what was it last week? I said I'm warming up to silver. Remember that? How many of you guys have been with me consistently here? Yeah. So we finally got the opportunity. Obviously, that thing had run up pretty nicely, and you never want to chase. You got to be, you always want to be patient. So we got that nice pull back from 20 down to 1885, and right, Steve? So yeah, we finally got it. And then if you look at your charts, you can see, we nailed that thing right on the lows last night, and we just got out. I'm going to look to get back in it again. So that was Again, not all trades work out, but that one worked out nicely for us. Going forward, since we're on silver, we've got a bunch of congestion around the 20 area. If we can get another rally-based rally after we on a pullback here, I'm going to take another shot at this. I'm hoping it pulls back all the way back down to 1850, and I'll give that another shot as well, right? Or if we keep rallying, if we get any kind of rally-based rally on silver, and again, it's all predicated on what dollar does, right? On the dollar. So, and if you take a look at the gold chart versus the silver chart, I think I also mentioned this the other day. Silver looks way better than gold, right? Gold is still kind of just chopping around, not really doing anything. We got a nice pop from gold today too, but not to the extent that the silver market. The chart looks way. I mean, if you look at the silver chart versus the gold chart, it's almost opposite. Which is really interesting, right? So they're kind of diverging, if you will, from one another, where they typically trade in tandem. They're kind of diverging from each other. So that's interesting. In fact, gold has some really nice distribution areas coming up around 1700, 1720 area. If you check out gold. Now, one of the things I'm a little, as you guys know, I don't like to short this far down on anything. But if you want to give it a shot, that may be something to look at. I did mention that to my members today, those two areas up there. But I'm going to be curious to see if these metals are actually coming into a bottom here. So take a look at gold around the 1700, 1710 area, something right in there. Okay, you look at your chart, you can kind of spot those. And then I also mentioned copper, right, the other day. Look at copper. We're trying to get long copper via the COPX. The futures contract actually did really well today. We did not catch the futures. If you look at your chart on the future, and remember, I also mentioned that the other day that I was kind of really warming up to copper as well. So we'll see. Obviously, copper still needs a lot of work, but it's something to also put on the radar as a possibility for next week. Okay, so copper, gold, silver, all. One of the things that, in fact, I just got off with my members. We do our closing session 15 minutes before the market closes, and I mentioned that I think what a lot of people do is they get pigeonholed to just trading the indexes. Well, there was nothing to do if you think about it. You got all chopped up in the indexes. Not a whole lot to do today. However, look at the metals markets. Look at, you can see copper did well today. Silver did well today. So you got to have that kind of flexibility where you can, shift around and be involved in the markets that are actually moving and have that flexibility rather than just get kind of pigeonholed to one or two markets. So I would encourage you guys to do that. And again, if you want some help with that, come join me for 5 days for free and see what we're doing. I've actually had a few people take me up on that. And I don't know if Ryan's in here or who else. And I've actually had a few of you contact us, but never followed through. So if you're still interested, come join us for a few days. It's free, right? And see what we're up to. And then I'll get you some real specifics in there. Okay. All right. Oil. Also, we're in oil. Oil's been all over the place. I think, oil, we actually were in that. And then I think I mentioned also, look at your chart on oil. 90 is the new resistance, right? Clearly. In fact, we peaked right at 90 yesterday. We came right up to 90 and then fell off like $5. I suspect we're probably going to start a new range in oil between, like, let's say in the 84 to 90. You can see that. I mean, we actually caught the lows last week with the USO, but still can't get any traction on that thing because, I was actually anticipating that we break above 90 and go and shoot right up into the 92, 93 area where there's some really nice distribution. but you can clearly see on your charts we failed miserably right at 90 and fell right back down again. So we'll have to see what happens with gold. And then nat gas, another one that I'm interested in. That thing. Look at that thing's moving $5,000 a day, $5,000 to $10,000 a day. It came right up to that 920 area and sold off like crazy. I'm looking at that 750 as if we break 750 on nat gas, that thing's probably heading all the way back down into the low fives again. But all in all, I would also suspect that we're going to be in a massive range going into the winter in Europe and so forth in nat gas. But you got to be careful if you're going to trade nat gas. That's what I'm utilizing, options in nat gas, and using, UNG more or less. And even the options on UNG are pretty elevated. I mean, the implied volatility on those things is pretty high. So you got to actually position those properly when the volatility is that high. I think the implied volatility in that's like in the 90s even on the UNG. So and then at trading the futures, even the mini contract, which is actually not too bad, is still. That thing's it's instead of 10,000 MBTUs, it's 25,000 MBTU. So it's still pretty pretty volatile. So yeah, be careful. So the levels on that, I would just say 750 up to about 10. I would just call that a massive broad range. We are coming down. I am going to probably be interested in looking at that 7.5. You can see that on your charts as well. Okay, on nat gas. Since we're coming right back down. If we break that, though, I think we're probably heading much lower on that as well. Okay. All right. And then grains, wheat is the only one I'm really trading right now. 880 is the breakout point. It's been chopping around, looking for 880 to break out and then head up into the 950 on the wheat. Nothing really happening in corn. I mean, soybeans actually did pull back from the 15, but it's been chopping around. There's not a whole lot to do there. And then the dollar, lastly, kind of hovering and also, if you let me finish up with this. I got about 8 minutes. If you take a look at bonds, I haven't talked about. So bonds, the dollar, and stocks are all highly correlated right now. Look at your charts. They're all kind of just chopping around. The 10-year is barely holding on to the 1.7. So this is going to be critical. And obviously with the Fed coming in next week is going to be interesting. Just holding around that 114.10, which by the way coincides with the 3.5% yield on the 10-year. And that's going to be a really significant area. If we break through that, in other words, if prices in the 10-year fall below 114, i.e. taking the yields up above 3.5, then I believe that's going to actually get us to a new low in the stock market. So we'll see what happens with that. And obviously the Fed next week is going to be the big deal. Just like this week was the, everybody was expecting a benign CPI number. And again, markets do not like surprises, right? So that's really, and there's really not a whole lot to really, the stock market is kind of, again, kind of in a stair-step fashion. So from a day trading perspective, if you've been trying to trade the indexes here in the last 2 days after the big sell-off, it's been a challenge, right? Because even today, today was just kind of chopping around. And in fact, we had a little bit of a pop, even though we ended up negative on the day. Make sense? So I think, do you have any questions, anything you want me to cover? I think we pretty much covered. So just to kind of sum everything up, we got obviously, got the Fed tomorrow, next week. Market's still under pressure, but under the surface, there's some stuff that's going on that could be bullish. We'll see. It's all going to be predicated on, I think, the commentary from the Fed. So 75 is locked in. And I don't think they're going to do anything different because they don't want to surprise the market. They don't want to shock the market. And I think they're still going to talk, very hawkish. Inflation still elevated, but there will come a point, just like back in June when the market bottomed, that market kind of starts discounting forward earnings, and we saw FedEx start. We're going to start getting some of these warnings about the economy slowing down and so forth. So it's going to be interesting. But keep in mind that the harder they sell it, there will be a point where that's the whole point of the market selling off, is it's trying to discount future earnings and future economic activity and higher rates. And there will come a point, maybe it's at 3,000 on the S&P, who knows. That's really where you got to start backing up the truck. And if you ever wanted to buy some quality companies for the long term, I will let you guys know, right? That's really, you got to start bringing up your shopping list, right? That's exactly what it is. And I think we're getting close, maybe another couple hundred points down on the S&P, but be ready, anticipate, right? That's really where it's at. So any other questions before I take off? So again, if you guys want to join me, click the link below, sign up for the newsletter. I am going to probably have another class in a couple of weeks. By the way, if there's any topic that you guys want me to cover in my classes, I'm running them every 2 weeks. Just contact my support staff at transparenttrading.com, and then I'll run a class for that as well. Okay. If nothing else, I will see you guys on Tuesday. Anything and everything is possible, Robert. Yep. We'll just have to see how it goes, right? I think, again, don't get too hung up on supposition. Just let the market kind of dictate how you want to proceed every day, right? Would it shock me that the market rallies probably in the next couple of days? See, that's the whole point. Like even today, right? You see the market actually picked up in the end, right? Where everybody's assuming that the market's just going to keep going down. Nothing goes down in a straight line, correct? And if you want to short it, you actually have to wait for a bounce to get short. Does that make sense, Robert? All right, everybody. Thank you for joining me again. Give me a thumbs up, let people know so we can grow the channel. And I will see you on Tuesday. Have a great weekend, everybody. Take care.